Welcome to the third video of the 2020 Financial Information Exam for Level 2 Accounting. In this video we're going to take through just the questions in Level 2 using the resource we did in Resource A and putting the answers into Question 2. So the first thing we're going to do is look at the general journal entries. The general journal entries is indicated by the narrations down here from what we've already done. So the first thing is to record printing expenses paid in advance. So when things are paid in advance, expenses paid in advance, it's called prepayments. So we're going to debit prepayments. And the prepayments figure, as you've written down already, is 4,200. Good idea to put the comma in. It just means that you get the right figure. And the credit was for the printing expenses. They belong to next accounting period, not this one. So we're going to take them out of this year and put them into next. 4,200. Done. Wages owing. So wages owing, you've already done that with the accrued expenses here, and that's on the credit. So the debit actually went to wages for the 1,400. And the credit goes to, don't forget to indent your credit. Nice. Alright, then we come up to a ledger. Now, a ledger's a little bit different because we've got our debit, credit, and balance column. And so we're looking for inventory. And see inventory over here. Start off with 42,000, so that was your balance on the debit side. And then we wrote off some inventory. Where are we? Inventory. At 3,500. And we wrote that off to cost of goods sold. Oh. That was the inventory that went down in value. And because it went down, we're going to credit it. And that balance 38500. Because inventory is an asset, we're not going to close that off to income summary. So we'll start next year with an opening balance of inventory 38,500. Accounts receivable, this is the notes to the financial statements. So the notes to the balance sheet. We've got accounts receivable, and so we just need to take the information out of here. So we start off pretty simple, the first part. We had 8,000 there. And then, do you remember what we take off? We don't need the G. This allowance. When you're writing these in, we're going to put it in brackets at 200. And you'll see that allowance is this figure over here. That one there, that allowance for doubtful debts. And make sure you don't abbreviate again, because the examiner loves to take marks off you for abbreviating. Done. So good easy marks coming through. Then we've got the financial position, or your balance sheet. So that's basically your assets less your liabilities equals your equity. So the first asset is starting with C. Our current assets. So current assets, we're going to go, the first one we've actually just done is this one here, our accounts receivable. And the figure, that's the net figure. Just stops all that clutter in your balance sheet. Then looking down over here, we're looking for any other assets or current assets. Our next one, inventory, which we've just done up above, and that's 38,500. Normally we'd expect to see bank there, but you see that bank's on the credit side, so it's not a current asset, it's a current liability. The only other one going down is this prepayments. Often you get current assets and current liabilities and those adjustments down the bottom. Right, and then you'll just add up we'll get our trusty calculator and just add those up. Good. After current assets, ours non-current assets. And for our non-current assets, the first one we always do is property, plant and equipment. And make sure that again there's no abbreviations in there. And we take the carrying amount. Now, often we have the carrying amount is like here, this is note 1, this might be note 2. Unfortunately, we're not given the property, plant equipment to do in this assessment, so you're just going to have to add them up. So what we're looking at is our printing equipment of 235 plus our warehouse fittings of 130. That's the cost of the assets, minus our accumulated depreciation of 104,600 and minus our 31,000 there. So again, trusty calculator. So we'll go 235,000 plus, that's our figure, 130 minus your accumulated, and that 31,000 there. So 229,400 is the figure we'll put here. Because there's only one, put it into the second column. Alright, I hope you're happy with that. There's also investment assets and intangible assets, but reading down here I can't see any term deposit or shares in another company, and there's no goodwill, so that's our total assets. And again, I'll just get you to add those two up. We're going to add onto that 5,500 to 79900 in the last column because it's a pretty critical figure. Alright, less liabilities. Feels like we're almost on the home straight with this. So current liabilities first. So again, looking down the right hand side, our credit side, and we start off with accounts payable. And because it's heading, or one item in there, first column. So we've done this one. Reading down, we've got our next one, bank. GST. Again, take a lot of satisfaction with that GST, that you've done all the hard work, all the mahi earlier on. So that's going to be a merit or excellence grade for you. The loan's due 2026 and we're only in 2020, so it's not a current liability. We've got accrued expenses and income in advance. Again, make sure you don't abbreviate. And again, because you've got handwritten ones there, they're worth merit marks. Right, and we're going to add up our total current liabilities. Good, and then we're just after our non-current liabilities. Normally there is only just one of those, and that's just our loan. Because the full title's here, we write our full title down here. 2026. And because there's only one, it goes into the last column. So that's our total liabilities. And very important figure for us, our total assets minus our total liabilities. $208,400. And what you should do is double underline this. I'll see if I can do it on here. No, you can do that. So that figure is going to be balancing the figure that we need at the end. So our last part is our equity. And that starts off with our capital figure. So that's this figure over here, at 177,000. That's what the owner's value was at the beginning. And we're going to go add. These drawings give us our closing capital. Alright, so what figures do we have? We've got the figure, firstly that 177. The drawings figure we have, that's at 47,000. Put that in negative because we're going to take it off. We've got a closing figure too, and the closing figure is our 208,400 because we know it has to balance. So all that's left is to find the profit for the year figure. So we can do that by working backwards. So 177 plus something minus 47 is 208. So working backwards, we can go 208,400. Instead of minus the 47, we're going to add. And then we'll take away our opening balance. So it means our profit is 78,400. And you can probably just check that going through. So 177 plus 78,400 minus 47 is 208,400. And that's it, Bob's your uncle. Congratulations, E8. The next lesson will be on question 3. Hope you got that right. Ka kite.